Good afternoon. This is Ravi from moneyletsgo.com, taking a look at the US crude oil chart today. And following my previous video, I did mention to you that I would be updating you on my previous trade. So as you can see here, this was where my profit target was, 10,490, and you can see the long drop in price at this level. Actually breached the 10,490 all the way down to just over 10,200, and it's clambered its way back up. So the trade was successful, as price was moving more towards the target level. I was bringing my stop loss down to limit my risk, which is a move you should be making if you're opening a trade. That is merely to reduce your losses. Retain your cash, or keep as much cash as you can, because if it does go the other way, it's more. At this point, if it was to go the other way before it hit the target, then it probably would have spun out and just completely reversed, taking out your initial stop loss, which is why it's a good idea to monitor the trade and move the stop loss down. Again, it depends on your type of strategy, how you play your trades. Some people, have tighter stop losses. Some people have looser stop losses. It's all dependent on how much you're willing to lose in that trade. Like I said in a previous video, it is very, very important you do set a stop loss, because, and this is speaking from experience here. When I did first start, I didn't even know what a stop loss was. I mean, it was really stupid of me not to do my homework in the beginning, and more often. There was many times, not just one, that I blew my account up because the trade just went the other way. Didn't have a stop loss in place, and there was times when I was just pumping more money into my account to try and keep the margin alive. Big mistake, absolutely, terrible mistake. I'm hoping that anyone watching this video realizes the importance of putting a stop loss in and managing that stop loss if the trade goes in your favor, just to reduce the risk. So a successful trade on this one. I did say that this is a level of interest. What happened after the trade closed was price did breach the 10,490, and there was a really strong recovery before it again reversed completely back down to around 10,400. This, as I said, was a very crucial level of interest, and it showed that when price did initially hit this area, we saw a massive reversal, only to hit the 50 and around the 100-day moving average, only for it to completely reverse again, subsequently go lower. And this is what we call a demand zone, price demand zone. Here we drew a supply zone, and here between the two support lines I've drawn is actually a demand zone for where people are interested in taking a long trade, and if it does breach this demand zone. Let me just draw it in a box for you. 1 second. Okay, so the common thinking is that if price maintains in the demand zone and subsequently goes higher, it means the demand zone is held. It means price. There's high interest in this area, and people and traders do not want, not necessarily want, but have a high level of interest, and there's no interest below 10 100. If price does break below 10,100, then we're looking at a potential further decline in price. And around here, as you can see, there's a cluster formation. It's an accumulation zone, and it's another what we consider a demand zone. There's a lot of interest around here, a lot of choppiness, a lot of accumulation, a lot of cluster. And that's another point. Once if price does breach 10,100, we're looking at the next section, which is our next demand zone around here, around 9,400 to 9,700 as our next demand zone. If you do like the content of my videos, please feel free to subscribe to them. And again, as always, I'm happy to help wherever I can. Thanks for watching.